Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, November 15th, 2009. We've got some choppy action going on in the markets currently. I just want to point out a range that we seem to be stuck in here and some fake out moves that have been happening lately. In last week's video, we discussed the failure of the breakdown here. There was an immense spike in volatility. If you recall, a couple weeks ago, I was saying that I felt this was here to stay, especially after seeing this move here that just negated this up candle, but obviously the market didn't think so, so there was just a fake out of the trend line. It was what you'd call dangling stuff or whatever, and we ended up retesting the highs. This is not really a new high here, more like a double top so far, however, but what you need to really focus on now is just the 1080 to 1100. In the exact same way that there was congestion here in mid-October, and then the congestion resolved itself to the downside, there was a playable move here of, a good amount from, say, 1080 to 1040. Well, the same thing is happening here, so we need to be on watch for either a break above 1100 or a move below the 1080. If we do move below the 1080, this will be very, very interesting because you have to kind of look backwards after you come down and ask yourself, how are people going to feel who may have been buyers here when the market didn't make a higher high? See, when the market came down here and broke down under the trend line, it was coming off of a pretty solid higher high. This was a good enough move above this high here, about a 20 points in the S&P, so nobody was really disappointed, meaning that even though there was a fake out under the trend line here, there were probably still enough buyers in this area looking to get back on the train because they felt, okay, we just came off of a higher high, so now, let's try and see if we can push it back up to that high and make another higher high, right? I mean, that's just the basic psychology of all the players. Well, in this case, we didn't make a higher high. We've just chopped around so far. So I'm just saying, be very careful and watch this 1080. If we have a breakdown, this could be relatively bearish for the market. All right, what continues to be the driver of all of this is obviously the dollar. I've been talking about this for a while. It's everybody who's watching the market knows this. It's nothing different. Something did happen, however, this week. This is a dollar index. I switched over to the toss charts because I can't get this on the other package. So this is the U.S. dollar index, the futures on them for the front month, also known as /DXZ9. And what I wanted to point out here is notice that the move here, this is on a daily chart. Let's go to the pointer. 3 days ago, 11/11, we made a double bottom here, which is interesting. This has happened in the past. If you go backwards in the dollar, I believe it was about twice this has happened in the past where we had this similar kind of double bottom action. Here, I guess, would be one example where we bounced a little bit right here, right, and then came up a little, but then it failed. And now we've come down to here, all right? So we made fresh new lower low here. We bounced hard. Same bottom here. Even though this is a little bit lower, that's what would be considered an undercut or fake out. It's really not even enough to be an undercut. Undercut's a little bit bigger of a move. But I'm just pointing out that you do have some bottom here in the dollar, and obviously the key is going to be this big body candle, which was obviously Thursday's action, right? And since then we've retraced a good piece of it, but that's okay. This could still be within the context of a reversal here. So I want everybody to watch this $75 75 area rather in the dollar index, and if we move up over it, then you would expect the S&P to move opposite, right? The stocks have been moving pretty much inverse to this chart for a very long time now, and that should continue. So we're going to keep an eye on that. In the back to the majors, let's take a look at the other ones here just to make sure they're all in sync. The Dow is looking the same as the S&P. However, this was a much higher high than the prior 10,000 area, so that's actually quite bullish in the Dow. And the Russell, which we talked about recently having some relative weakness, is still relatively weak and still underneath the trend line, and the NASDAQ composite, is actually weaker than the S&P, right? There was no higher high here. So we have basically just a lot of mixed signals in the market right now. Those of you that are following along with our newsletter plays know that we've been relatively quiet as of late. Whenever we go into a mode where we're just not sure of the market, or we're slightly distrustful of the moves, then we kind of chill out and remain in cash. So that's kind of where we are now. We're not looking at too much stuff. I do have a few names here that I will go over. Obviously, the main catalyst is going to have to be a move up over this 1100 which would spark the bulls back into action. We are coming into an expiry week this week. Be aware of that. November 20th will be options expiry, which is generally bullish. So we may chop around a little bit more in this range and then make the break maybe closer to the end of the week. So we'll see. Cautiously bullish, obviously. Let's look at a couple of names here that I am looking at. Boeing on the pullback here. I was thinking eventually they're going to get their Dreamliner thing resolved, right? And the stock's probably going to rally when they finally give the green light, I guess. So it's probably doing it a little bit in advance. But nice cup and handle seems to be forming there. Also, a couple of weeks ago, I talked about ACH, which is Alpha Charlie Hotel, which continues to look like a big choppy mess because this is an ADR, a Chinese stock. It looks like a big choppy mess on the dailies here, but notice how it just gets tighter and tighter on the weeklies. This was a free trade idea of the week a couple of weeks ago, and it just never really got in gear yet, but it hasn't fallen down either. Notice that both trend lines of the wedge here of the symmetrical triangle are still intact. So, and I like the way that these last 2 weeks here were small-bodied candles. So I'm continuing to watch this stock for a breakout to the upside, a move over this week's high here, which would be right at the 29.05. So maybe you want to give it around 29.10, 29.15. Might be a trigger point. And notice as the triangle has tightened, you've got some very small body candles, so you have a relatively tight stop there. The low of 2 weeks ago is 26.71, so that's really a relatively small differential, so you'd be okay probably with a stop right there. So keep an eye on that one. Also, the free trade idea of the week this week is interesting because it's Digital River, and I should actually put it on the daily because this is the way you see it in the weekend update that you're looking at right now. If you're not aware, there's a free trade down in the bottom right corner in the second column. Just scroll all the way down. And this came to my attention on a scan just because of the really odd pattern here. And I'm just thinking that, you know, most gaps fill, and I'm not going to go so far as to say, yeah, it's going back to 40. But as written up in the free trade idea of the week, you can see that I've put a target at 31.51, which is a declining 50-day moving average, which obviously is going to move a little bit lower as time goes on. So let's say maybe around $30. Basically just a simple gap fill in this area here. On October 12th, Symantec canceled their contract with Digital River and said that they were no longer going to be involved with them after, I don't know, June 2010 or something. This is obviously really negative because about 22% of Digital Revenues, say that 20 times fast, 22% of Digital River's revenues come from Symantec. There you go. And so obviously investors thought this was really negative, but notice that there has been what is known as a lack of follow-through to the downside. We had some follow-through to the downside through the month of October, and I don't know if they reported earnings at this point. I don't know what the catalyst was on 11.4, but regardless, it changed the personality of the pattern, correct? It just completely changed everything, and now you're coming up in here, and of course, Technical Analysis 101 states that as soon as you break over the high of this bar, right here, which is 27.11, so you might want to give it about 10 cents over, 27.21. This should slowly grind higher because in here is what is known as a price void, and everybody in this area is short or dumped their shares overnight, et cetera, and these voids, or windows as they call them in Japan, I believe, usually fill. So we'll keep an eye on that. I have a number of other names here that I'll be putting out to the newsletter subscribers: Coinstar, Lexmark, AMSC, that's a semiconductor company, Juniper, CLR is on my list, TMO, GPro, along with some others. And those of you that subscribe to the ShadowTrader Pro Swing Trader, you'll get the details on those as well. All right, bias remains choppy. Watch the 1080 to 1100 area, very, very key in the next week. I think we stay stuck in here for a little while longer, so keep the powder dry, and then over 1100, let the bulls run it. Daily candle close below 1080. I don't know. Be careful out there. All right. On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, from all the good people in Chicago, Illinois, at the one and only Thinkorswim, I wish you good trading and good night.